Hello, and welcome to our reoccurring video series showing quick and practical ways you can analyze and model your financial future in light of the current COVID-19 crisis. In this video, we'll be discussing how to think through the impacts on likely one of your most important revenue streams, property taxes. Local governments frequently rely on property taxes as one of their primary sources of revenue, exposing them to external and internal vulnerabilities in the current environment. Fortunately, property taxes are amongst the most resilient to changing economic conditions, as sudden shocks often take several months, if not years, to be fully realized. Scheduled timeframes for reassessments, overall stability in housing prices, and steady collection rates traditionally keep property tax growth in a very predictable range. However, a commonality amongst local governments is the pressure from stakeholders to voluntarily consider no tax increase budgets as a result of the current economic stress on taxpayers. New legislative changes at the state or local level could also alter plans for property tax rates and developments. In our baseline assumption, we assumed modest increases to the tax rate and assessed value to help achieve structural balance. To help demonstrate the ongoing residual effects of a no tax increase, we can create an initiative to negate our assumed rate increases in the next 2 years. Turning this impact on, we can see that the effects linger on beyond the next 2 years, and we can provide an easy visual for elected officials to put context behind such an important decision. Additional tax scenarios can be created to consider the multiple different options likely put forward by members of the board as well as the public. Originally, we had predicted healthy tax-based growth based on the recent growth of the economy and the level of new development underway. As an alternative assumption, let's adjust downward the next couple years of growth, given the halt to new housing developments. With non-essential construction curtailed in our community, this will have the downstream impact of deteriorating our original growth assumptions with less value being added to the tax base. Due to the levels of unemployment and the hit to the local economy, we are also going to factor in a decrease in our collection rate to acknowledge that certain individuals may not be able to afford their taxes. As of this moment, we expect this to be a relatively temporary issue, where future years quickly go back to historical averages. With all this in place, we have a much clearer view on the overall impact the current crisis will have on our most important revenue stream. And we also have begun to incorporate different controllable initiatives that can be layered on top. Join us for future sessions where we will continue to cover the impacts this environment is having on different areas of the budget, as well as the corrective actions that can be taken or considered as part of a plan of action.